Josh, I obviously am going to go to you first. A+ is the second big test, right after Palo Alto got the poor grade. Not Nvidia, A+. Jensen Huang, accelerated computing and generative AI have hit the tipping point. He said, you said this was the whole ballgame going in.
Yeah, I really felt that way. And look, it's not important whether you bought Nvidia or you sold Nvidia or anything in between. What really matters is that you acted emotionally, as we could all attest. That's really what you're going to want to do here, is follow your heart. Most people went into this report, myself included, saying there has to be some incredible quarter. Like, there's just no way this stock can continue to levitate higher if they don't knock it out. And that's really what they did. I don't think anyone's really arguing with that. I saw the sell-side research, Judge. I saw a couple of firms say, okay, everything's great, but it's reflected. I didn't really see anybody saying that they're worried about next quarter or end-of-year number. And so in the absence of that, it's more buyers than sellers. The story is old as time. Here's the most interesting thing to me. People say, well, how can you justify buying it right now? Well, if you could buy it last year, you could buy it right now. I'm not, but you could. Nvidia is trading at a 34 forward enterprise value to free cash flow. Sounds relatively high to other technology stocks, not high for Nvidia. In May of 2022, almost 2 full years ago, it was 43 times. In July of 2022, it was 58 times. So that number has been significantly higher than where it is right now. This is basically a stock that somehow finds a way to continually justify ever higher prices with the actual fundamentals. It's very rare. There aren't a lot of examples of this.
I'm glad that you hit the valuation thing head on, because we had the conversation, you and me, with Stacey Rasgon Bernstein yesterday going into the print.
He raised his target. I told you he would.
He did. And we put this to him about this argument about whether Nvidia is too expensive on a price-to-earnings ratio forward. Here's what he told us.
Nvidia is still not expensive. It's actually still the cheapest of all of the AI stocks. It's way cheaper than AMD. It's cheaper than Marvell. It's even cheaper than Intel at this point, right? So I still think there is room for expectations to continue to go up.
That's the key, isn't it, Bryn? As Stacey Rasgon, as Josh just said, quote, the story, this is what he says today. The story still feels like it has legs. We markedly increase estimates again and take our price target to $1,000. He was at $700, which we asked him about yesterday. Said, don't pay too much attention to my target there, but he bumps it to $1,000.
Yeah, I mean, what's so incredible is, if you think about it, if you take a Google, Apple, Meta, Microsoft, and Amazon, what, $12 trillion market cap, when all of these companies get together behind the same theme, which is AI, Nvidia is the recipient of all of that, the majority of that CapEx. And so this call, if you haven't listened to the call as an investor, I implore you to go listen to the call. It was like a masterclass. And this is so exciting because I've just never seen a company that in 2021, they had revenues of like just shy of 17 billion. For 2024, they're going to do 60 billion. I just don't know of a company this size that have had just this catapult. And so investors need to remember the revenues and earnings are growing really in lockstep with the price. And so I think they're hitting on all cylinders. I will say, Scott, though, if you think about it a year from now, I don't think you're going to continue to see 200% growth year over year, because you're going to see that stabilize. But you're still even looking out even further out. This company is probably going to be growing at 15 to 16% a year. So they just continue to be in pole position while everyone else is just trying to ride their wave.
You were calm, cool, collected yesterday going into the number 2. I asked you straight up if you were nervous. You said no. Because you believe in the company, you believe in the stock. They obviously delivered. Jim Lebenthal, I'll go to you next, because you also own it. Reasonably new position for you. You were looking for this thing to trade lower so that maybe you could buy more. You're not going to get that chance, or maybe you had it and didn't buy enough.
Yeah, no, I don't think it's going lower from here, but I also think the major point that I would make is that you do have to own this. Now, I know it's a controversial statement. There are some on the desk and others who are not on the desk who would say there's no stock you ever have to own. But look, clearly all the oxygen in the room, and by that I mean the cash flows in the market, are going to Nvidia. And fundamentally, there are strong reasons, which Josh and Bryn just pointed out, for that to continue. You know, I said last week, Scott, and you'll remember, I said, listen, you got to own own this at 1%. That's a small enough position that on any dips you can add to it. I'm saying that again today. If you don't own it, I do recommend that you add a 1% position to it.
When you look at this compared to your other holdings, so this company, 21% operating margins last year. This year, 62%.
Yeah.
This is unheard of.
I mean,
but here's my question. So you look at that and you say, maybe 1% is not correct.
Maybe it should be more.
Well, we all own like some we have these companies that are earning maybe like 2% profit margin, trying to scratch nuggets of copper out of the ground.
I'll dance with you. I mean, look, the reason I'm saying 1% is, let's face it, it's up 15% today, and we can go through the superlatives of its price return year to date, the last 2 years, whatever you want. I mean, the 1%.
It was 660. I'll go back. It was 666 yesterday.
Right.
Ahead of the number, I was like, oh man, that's an ominous number to go into a print on, and now it was 777.
And
so it's up 100.
I'll just close on this from a fundamental point of view, and I know it sometimes drives you crazy when I do this or when Stephanie does this, but you look at the valuation, you're going to say, as Stacey Rasgon just said, it's not expensive. I mean, the earnings estimates are going to go up after this, and it's probably below 30 times forward earnings. You got a growth rate of above 50%. The PEG ratio, price to earnings to growth ratio, folks, is below 1 for a company that is just absolutely knocking the cover off the ball, and the cover and the ball are out of the park.
Yeah. So, Steph, you don't own it. I think people know that by now. You own Broadcom, you own Lam, you own IBM. I put a sad face emoji by your name today in our document today.
It's a humbling business.
Playing a little bit
it's all right.
on that.
Stephanie, why do you hate Nvidia?
I knew you were going to say that. Or why am I short Nvidia?
Because
why are you shorting Nvidia,
I think
Stephanie?
this is not me saying this. I'll channel Rasgon and say, no one has to own anything. But don't tell me you don't own it because it's too expensive. Because as he makes the case, it's still actually the cheapest of all of the AI stocks.
Well, it's not.
That's Stacey Rasgon.
No, it's not. At 32 times, actually, Broadcom's at 27 times. And I think that Broadcom is a great way to play AI. And so that's what I've chosen to do, as well as Lam, as you mentioned, as well as IBM. And we're going to talk about another name down the road in the next block. But look, the stock is going to continue to work, especially as the hyperscalers continue to show that demand. So it's really durable. And the inference numbers were huge at 40%. That's double what people were expecting. So all that's great. I just feel like I missed it, and I also feel like I have better value for what I see as superior growth, not to Nvidia, but to many other technology companies, especially with Broadcom. I mean, Broadcom is the #2 AI supplier, $8 billion a year. They're the #1 custom ASIC player, $12 billion per year. And they have cloud, they've got data center, they've got wireless, they have VMware. And I know you want to have this discussion more about Nvidia, but I'm just saying that you can own both.
No.
I don't own both, but I own a good player, and I've had a nice return in this thing.
I appreciate very much your reasoning, admitting, hey, okay, I missed it. You just said I missed it.
Yep.
But I have these other ways that I can still play the trend in really key players that are cheap on a valuation standpoint, where you can get comfortable around it. Not everybody picks every single stock perfectly. Jim got into this name after it had already gone up a ton. Now says, well, I'd still buy a percent today. I think you probably disagree.
Yeah, no, it's hard for me to do that.
With that?
I mean, I would rather buy more IBM. Or maybe I do circle back and buy a Broadcom. I was taking gains, but maybe I might, we'll see. I may get a bad day.
There's a market correction.
But wait a second,
would you buy it?
If there's a market correction?
Yeah, like if it were down for nothing to do with Nvidia, but there's like a beta splash and there's an opportunity, would you think about it?
Of course, I would always think about it. That's the prudent thing and the right thing to do. But if we get a market correction, Josh, all of my other names are going to sell off too, and I'll buy them back. And I'll tell you what, I mean, Nvidia really focused on hybrid cloud too, and no one is giving IBM the respect for them owning Red Hat, which is 43% of their total revenues in their software component. And their software and consulting is now 75% of total revenue, so you're going to see better margins, better recurring revenue, and that's the one that I think is the most underappreciated. So again, I got exposure. I don't have Nvidia, but I'm okay with that.